Hello, and welcome to today's Growth Leaders Report. We're going to be going over some of the stronger stocks in the growth space over the next 15 minutes, talking through some of the setups that we're taking inside of TTI, names that we're already in. I'm going to show you a trade that we're actually putting on today as well. So we're going to go ahead and get started here. My name is Hamilton. I'm here with the Trading Initiative. And in this week's Growth Leaders Report, August 14th, 2024, let's go ahead and flip over and you can actually look at it with us. The Growth Leaders Report here is something that we like to look at on a weekly basis. It's essentially our spin on the William O'Neill's Can Slim method. We throw our technicals on top of some of the fundamental stuff that he really liked to look at. And what we've found is over the course of quarters and potentially years, a lot of these stocks tend to be in uptrends for an extended period of time, right? For multiple reasons, these stocks tend to trend upwards for a very long time. And so if we can catch them out of bases into stage 2 uptrends, these things can typically run for a very long time and be very, very bullish for us over the long term, right? So as we're looking here, this is kind of the top 27 stocks that showed up on our scans. We tend to cut off at the minus 10% underneath 52-week high. We're looking at all sorts of stocks, sectors, industry groups, market caps, and then we sort them by proximity to 52-week high, right? So what we were looking at here pre-market was a big list of stocks coming off of kind of this drawdown that the market's been in for, I would say, about a month now. Some of these are already breaking back out into 52-week highs. Other ones have drawn down a little bit more, but these are the names that we are focusing on today. So a bunch of these names are actually already in, which is really great. From a TTI perspective, we're already in a bunch of these, and so I know that our focus is on the right areas in the right stocks. And we were able to identify these, by the way, prior to this morning's scan, right? It's all about relative strength inside of TTI. We like to match relative strength with absolute strength. And so by focusing on those specific areas of the market, we're able to get ahead of some of these big bounces and into new uptrends, right? So we're going to go ahead and start off with, we're just going to go through some of this list here, names that stand out to me in particular, names that we're already in, etc. And if you have any questions regarding any of the setups, feel free to ask me. And if I see them, I will try to answer them as best as I can. So the first stock I want to go through really quick is SharkNinja. So this is a stock that we've been in off of the 54 area breakout way back at the beginning of 2024. There's a lot of people that have apprehension buying these types of setups because there's just not a lot of price action history to go off of. And while I understand that, these IPO range breakouts are incredibly effective given certain market conditions. And this year, regardless of what everybody has said, even after last Monday's pullback, this has been a very bullish year. And so this particular setup has worked very well for us. You're going to see it again later on in this session. In particular, these IPO range breakouts, particularly into all-time highs, have been performing very well for us. A bunch of these trades have been some of the best performing trades this year. So SharkNinja, we were able to get in at 54. We added in prior to the gap up somewhere near 65, 66 bucks. Then we were also looking to get back in above $80 as well. For those of us that were able to hold the trade for the majority of the move, we're obviously up into all-time highs here, up into the $90 range right now, which is great. We have an overall price target on the next leg up at $100. What we do there, we'll see what the market's like. Probably going to continue to add into this trade at $100 as we peel some profit off and then add it back in as the uptrend continues to go up. There's no reason to try to sit out this beautiful uptrend here in SharkNinja. And by the way, fun fact, when we first found this name, I had very little expectation that this was going to run the way that it has, right? We tend to match up sector and industry strength with absolute strength. We like these all-time high breakouts over IPO range high, but very little encouragement that this was going to be a $100 stock at any point this year. Also, I didn't even know what the hell SharkNinja was. I thought they just made blenders and stuff, but apparently it's an entire line of consumer products. So for whatever reason, the market has absolutely loved SharkNinja. This consistently has been one of our better performing stock trades, equity trade, and to a certain extent, options trade as well. And it consistently shows up on our Growth Leaders report. So a really good winner there with SharkNinja, currently sitting right underneath the 52-week high. We're also looking at EGO. We're actually in EGO. We've been in EGO as a gold miner play all the way back here in March, late March, early April. So if anybody has any experience trading gold miners, they're not particularly the easiest industry group to trade. Everybody wants to go and own these things because of people like Stanley Druckenmiller, et cetera, that put a bunch of size into them as he peeled stuff off of NVIDIA. But what people fail to realize, particularly options traders, is these things don't typically go parabolic and just rip to new price targets. They're very choppy. They oscillate back and forth. And so you have to have the right expectation when you're trading these and the right play, meaning you have to have time on your side if you're going to trade gold miners. And we do, right? We have December's or January contracts, if I'm not mistaken. We opened them back in March. So we have a lot of time still left on this play. We are up at 7-year highs now. I believe we're about to be in the money at $18 or $19, so this should be a profitable trade for us. This gave us some of that gold miner exposure, continues to show up on our growth leaders report as well. There's really nothing to do here in terms of adding into it. This was just a play that we took, based off of the gold all-time high breakout at the time, which, by the way, gold is still breaking out into all-time highs. We also have a position on gold itself through ticker GLD. But this gold miner trade, EGO in particular, continuing to work for us. But once again, I need to point out it's not the easiest trade in the world. And for those of us that don't have patience, this would be, a very time-consuming and nail-biting trade, because every time we hit new highs, we oscillate back down, and that does kill options premium. Then we oscillate back up, and all of a sudden the premium is back up. So eyes on the prize on these types of trades. Actually filmed a webinar on these types of trades, momentum versus duration, back when JP Morgan was just breaking out to all-time highs. That was a trade that I took. A bunch of guys inside of TTI took. It was like a 500% winner on the options and like a 25 or 30% winner on the shares. Go study that webinar, because it gives you the expectations to build out that duration style trading that you're going to need for trades like gold miners. So this is another good trade in a rather slow-moving industry group, EGO. VIRT is kind of the name that we're looking at entering today. So I'm not going to go through the actual options play that we took inside of the group, but I'm going to show you kind of the rundown here on VIRT. So financials are still breaking out. Lots of relative strength there. All-time highs coming up close on the XLF ETF. And so we want to continue to add exposure into the financial sector, regardless of what everybody says. Commercial real estate's going to blow up. Regional banks were supposed to blow up last year. I don't care. It's all stupid. What I care about is owning strong uptrends. And as you can see here with VIRT, we have this very nice range that we can kind of trade inside of. It's IPO'd back in 2015. And we've been oscillating underneath the 3840 area and above the 10 area since then. So an extended range here that we're able to play halfway through. We have an upwards sloping 200-day moving average with price very much up and over it, which is what we like to see. We have the RSI trending above the 50. This is damn near a bullish momentum regime for the entire year. We're on the right side of an ER report, so we don't have to worry about any sort of ER report coming in. I'm going to go ahead and delete this. Any sort of ER report coming in, kind of beating this stock back down. And we have this interim, rounded bottom with the horizontal level that we can actually risk off of. And that's the most important part. There's a lot of people that are afraid to own stocks that are already up. Don't be afraid to own stocks that are already up. Just own them off of logical continuation fractals. That's it. Generally speaking, when stocks start to break out with high volume, like we saw here, this is a power earnings gap, right? PEG, power earnings gap based off of whatever came out in earnings. The market really liked it. It changed the story of the stock in terms of how Wall Street viewed this. Gapped up, consolidated. People are taking profits. Financial institutions are accumulating more, and now you have a new risk level up here to risk off of. This is our COD setup inside of TTI. So if you're inside of TTI, please review the COD setup on the market research side. But what does this essentially do? It gives us not only an opportunity to risk into a new breakout, instead of just chasing, we have a new level that we can risk. So we know if we're right, we know if we're wrong, etc. But from an option standpoint, this also leaks premium out of contracts. So you get this huge IV pop on the big breakout post PEG, and then you get a multi-week, sometimes a multi-month consolidation range. And what generally happens to premium after a big gap up, in this case 2 days, and then you get a couple of weeks sideways action, the premium leaks out because implied volatility starts to get crushed, right? So the calls get cheaper over time. And then when the continuation breakout comes, what do we like to do? We like to grab those calls, because now we're getting the same trade idea as everybody that bought here, but we're getting it for sometimes upwards of 50% or more off, right? Discounted. So the risk reward is skewed heavily in our favor. So we love this setup, COD setup. We're entering VERT today. We have high expectations for this. We're looking for an all-time high test. And then we get up near that 37.5 area. We'll see if we want to flip this into an actual all-time high with some longer dated plays, right? So VERT on the list, like the setup, right sector, right industry group. All the technicals are there. Why would we not take a swing at this? Next one we're in is Palantir. So we've been in Palantir for a while. This stock is working for us very well, depending on when you were able to grab this, and some of the people were able to add in on the pullback here and really size in off of that 200-day moving average break or bounce, Really like this. There was a lot of relative strength in the Palantir chart during the market pullback. For whatever reason, this thing bounced the most out of everything that was here. A very bullish earnings as well, right? So for whatever reason, once again, Wall Street is treating Palantir differently off of the earnings report. It really performed well when the broader market was pulling back. Post earnings, Palantir was pressing up. That's relative strength. So we'd identified that early. And we had already been in a position in Palantir, so we were having internal conversations about, do we add more here? Or at the very least, do we just keep this position on the books? We don't want to get in front of it. We don't want to stop out, et cetera. And some people were able to add in. Myself, I just kept the position on the books. Now the position is working well for us up into 2-year highs. So once again, we have relatively lofty expectations for this trade. We're expecting a $38 to $40 price target off of the 27.5 breakout. And above that, why would we not continue on into all-time highs, right? So a little bit weaker momentum than even Vert that we just looked at. If you look at these little breakdowns in the 50 RSI here, this does show that there are pockets of bearish momentum within PLTR. I know that this has like a cult-like following. Everybody wants to be long Palantir. And while I'm also long Palantir, it's important to understand that we trade based off of technicals, not what we expect or want the trade to do, no matter how much we want it to do it. The good thing about Palantir here is it's a massive 6% ADR. So from a shares and an option standpoint, this is a great opportunity to grab a fast moving name within the recent IPO growth space. RSI is now up and over 50. We're on the right side of the earnings report. We don't have to worry about any surprises, and up and into this 27.5 kind of range up near all-time high. If you look over to the right, there's no real volume up here. So even though Palantir had traded up here before, you're going to see a lot of classical traders, classical technical analysis go, well, I don't really know if I want to trade up into these previous spikes up here because there's probably bag holders up there that are looking to sell. Well, I would argue that, yes, while you're correct, there's probably not a lot of bag holders up here, given the fact that there was no volume up here last time as well. You can see massive accumulation base outside of this 3-year horizontal channel here, and so we're long, right? Trading above the upward sloping 200-day moving average, 50 RSI, really a good looking stock. We have good expectations for Palantir as well. Next one is YOU. So this was kind of an unexpected move off of YOU. This is something that we had talked about inside of the Sunday night strategy session just, I believe, last week. This is a very basic IPO, or excuse me, a stage 2 breakout potential above 24. You build these bases out over the course of a year or so, and then you get the 200-day moving average starting to tick upwards, and combined with something like a PEG. This gave us an opportunity to reasonably expect a 24 breakout and then a run. So we didn't try to front run this. You know, if you're inside of TTI or if you're interested inside of TTI, we don't really front run a lot. We don't try to time the bottom here. We're trying to grab the 80% of the move, the meat of the move. There's no ego involved in any of this. So we sat here patiently waiting for the YOU trade, and so we were able to grab it above 24. And actually, as a matter of fact, if I'm not mistaken, that YOU trade, if you guys flip over to Discord really quick, that YOU trade is up 400, 500% for some people that were able to grab it early on. So it's really a good opportunity there that I did not expect to actually perform as well as it did, you know, but one of those things where I don't try to predict on just how far or how fast the stock can go. Just get into some good breakouts here and see where the market wants to take it. You in particular was kind of a unique setup because it's a software mid-cap name, so we were taking a little bit of a leap of faith. If you put yourself in our shoes just last week, there weren't a whole lot of mid-cap or small-cap software stocks breaking out, so this is another one of those relative strength stories, just like we were talking about with Palantir in the last chart. For whatever reason, the market wasn't selling you. It was actually buying you, and the rest of the market was going down. And if there's anything you take away from this webinar, or whatever this is, this report, excuse me, is that when financial institutions are not selling stocks into weak tape, meaning that for whatever reason stocks are going sideways or potentially up when the indexes are going down, that is your cue to add them to a list. So when the market stops going down and starts going back up, it's reasonable to expect that the stocks that were going sideways or up during that market pullback are probably going to outperform. Right, guys? People pay me a lot of money to teach them that. So if you're getting that for free, take that to the bank. Great example of relative strength into the gap up off of a PEG last week when we were able to take advantage of it. So another one that's working well for us that came off of this growth leaders report. We have Meta. So I don't want to spill the beans on Meta, but I will say that I'm very bullish Meta. Think about what we were just talking about in terms of relative strength, right? Market pulled back. Look at the rest of the Mag 7 stocks and what they were doing, and look at what Meta's done. Once again, I'm not going to give you all the secret sauce. If you're not inside of TTI, I'm sure you can figure it out if you study hard enough. If you are inside of TTI, you should already know this, but study the fractal last summer, study the fractal this summer, study what happened afterwards. What do you think is going to happen now? Right. Relative strength matters a lot in this market. We're very bullish meta above 525. We're expecting an all-time high breakout. We're expecting a very big run off of the all-time high breakout. RSI is above the 50. You're up trading north of an upward sloping 200-day moving average, and Meta held up a lot better than most other stocks during that market drawdown and recovered earlier as well. So we really like this Meta trade. We're expecting big things out of this Meta trade. It worked well for us last year. This was one of our biggest cash wins last year, actually. We were able to grab it in early November, and we held it through the gap up in February. So we had March's or April contracts that we had bought back in November. For any of you guys that are inside of TTI, we frequently talk about Dustin's $200,000 win on the Meta trade. It was exactly almost the same setup. So although I can't sit here and tell you that it's going to happen again, it does tend to rhyme. These technical patterns are fractal in nature, so they do repeat, right? So as we continue to go down the list, there's a couple of them on here that that we're in that aren't really working that well. There's really nothing to talk about. Kava looks okay. Eli Lilly looks okay. We had a position on ONON. I believe it was free for a lot of people, so able to hold through the chop here. We're expecting a continuation play off the 44.5. I heard that earnings were bad. I don't particularly care about earnings. I care about how the market responds to earnings. So we'll see if we're going to continue to play this above 44.5 or not. As of right now, we still hold some free positions in ONON. And then the last one I want to talk about is Nubank, New Holding. So this is a Brazilian fintech name I have an affinity for. We've been long Nubank for quite a while. I've been long Nubank essentially since IPO and then dollar cost averaged in. So this is part of my long-term portfolio as well. But the most recent ad that we were able to grab was we were sizing in above the 1150 pivot, and Nubank hasn't really done a whole lot since then, right? That's not a fractal. I'm just drawing. There you go. That's probably better. Hasn't really done a whole lot, just sideways consolidation. So those contracts that we have on the books right now, although some of us were able to turn half of them, like we have a bunch of different tranches right now. Some of them are free, some of them are not. Right now, post ER, it does look like the market is treating Nubank a little differently, right? We came down, tested the 200-day moving average. We broke back up and over it. We broke back up and over the risk on level 11.5, and now we're very close to an all-time high off of a 5.59 intraday candle post earnings. And so if we think about this from a volatility standpoint, volatility on Nubank is 3.95 on average per day, right? Average daily range. So if we go ahead and just shift click up on something like today's move where we take absolute bottom to absolute top, we've already moved more than 2x ADR. So this is a high volatility day on top of a high RVol day, a high volume day, right? So there's lots of volume, lots of volatility. This is generally indicative of a continuation play in the direction of the trend, which means that I would expect Nubank is going to be up and over 13.5 and into that $14 range relatively soon. This also comes from the Growth Leaders report, and we have those $14 calls going out to end of the year. So I'm expecting a rather large win off of this earnings report. Nubank, patience is going to get paid. That's what I got, guys. A lot of really great names. Once again, I'll go ahead and show them to you on the growth report. We're already long a bunch of these. There's a reason why we're long a bunch of these, because they've been showing relative strength while the market has pulled back. And now that the market is bouncing, they're really starting to move a lot. So I encourage you guys that are inside of TTI to continue to look at these reports that we put out. Go through and do your due diligence on all of them if you want. Obviously, we try to highlight the ones that stand out the most to myself and some of the guys inside of the Discord as we talk through these. If you have any questions regarding individual trades that we're in, feel free to leave them on the actual report itself. I'll go ahead and answer those. And if you're not inside of TTI, feel free to click on the links below and you'll have access to all the stuff that we do throughout the day, including all of the trades that we take as a group. All right, my name is Hamilton. I'm here at the Trading Initiative, wrapping up the Growth Leaders report on August 14th, 2024. I hope you enjoy.